Crypto Mentor Foski, welcome you once again to this video. Yeah, I'm so excited bringing you this. So we are going to deal in depth and more basics on how to use candle charts, how to read them, and how to use them for your tech analysis. As an amateur trader, one thing you should aspire to become is to become good at reading candle patterns and become able to identify possible patterns when you are doing your tech analysis. You can use trend lines to draw patterns of Fibonacci on the Binance app. But more so, we're going to be going into this aspect more later on trade using the trading viewer. That's going to be on further classes. So on this video, I want to use this short time I have here with you to introduce what candle patterns and what the candle basics are all about. And if you look at this first page here, what you see is the candle basics. Now the candle, you see every candle have a body. The green and the red there are the main body of this candle. Now the green indicates a bullish candle, the red indicates a bearish candle. Now every candle has a wick, both at the bottom and at the top, at the both extreme. So the top candle, the top wick, which the black wick at the top for both one, is the eye, is the upper shadow. Then the bottom is the bottom wick at the low ones, which are the lower shadow. But for each of the body, the green and the red candles, there is quite a difference, in the sense that while a green candle starts from the bottom, while a green candle opens on the bottom, it closes at the top, but for red, it opens at the top and closes at the bottom, as you can see. So the price of that cryptocurrency possibly starts for a bullish one, starts at the bottom and goes up just above, goes above the eye wick, then drops down to that place you see for close there. Then for the red, it starts from the top, from the eye wick at the top, then it goes down, falls down to the low, and just like that, it happens to close at a little just above the low wick. So it differs for both. While the green opens from bottom, the red opens from the top. The green closes at the top, the red closes at the bottom. Now that's what candle basics is all about. No, there's not much difficult stuff about it. We are going to be practical on it later on this video on how you can apply them to read your tech analysis and make proper analysis on Binance. Now let's come on for these patterns. Now some of these patterns you see here are all patterns you can actually use as a trader. There's no probability that you will be able to grab all these patterns on your head within the space of a short time. It's actually practice that makes perfect. So you got to use time and time again, discover this pattern using trend lines and wedge and Fibonacci in order for you to be able to identify them. So the first pattern we have here, the first candle pattern, is the bullish flag. Now on that, you see that the bullish flag is actually it was actually breaking through it, walking through it within a trend line. Now within the trend line, there was a time it actually break out and it retested. When it retested the top trend line, it went up again. That is a sign that after the retest, it's a good time to buy. Why? Because it has broken the trend line and it retested and it's going up. So after the first candle, the first green candle you see just right here, just right here at this top, this circle place, is a good point that you see the entry point. You can enter at this point and you are sure that you make profit if you buy long or if you buy that cryptocurrency you're analyzing on either spot or future trading. Now the next one we see here is the bullish remnant, and the bullish remnant works in the same way as the bullish flag, only that why the candle didn't, why for the bullish flag the candle actually retested the top trend line. On the bullish pennant, the candle is not what retested the first trend line, rather the wick retested. The wick was what retested, and the trend line was in a triangle pattern, unlike the top that looks like a rectangular form. Now at a good time, that circle point is actually a time for you to enter the market, and you are sure the market will go bullish using this kind of pattern. Now the next one we have here is the falling wedge. Falling wedge, also the same pattern, but the trend line happens to have a different direction at this time. The same also, the candles tested for quite a time. It extended for the first retest. There was a red candle in between. There was another retest where the wick came down to hit the top trend line, and from there it starts going upwards. So it's a good time to enter if you want to go for bullish movements. Then this last one we have here is the inverse head and shadows. Head and shoulder, sorry. Now this is the head and shoulder pattern where you use one trend line to discover when the price of the cryptocurrency is actually within a range. Now there's a time when it started at first, the candles moved just below the trend line and was moving zigzag. When it comes up, it seems as if the trend line was acting as a resistance to it. So it finally break at a point. At that point where it broke, you see there that there was a time it actually retested again before going upwards, and you see that there's a time where you can actually place your entries. Just as long as it has break the trend line, you can go upwards and buy long. Then on this side we see the bearish pattern. Now this bearish pattern, just like the bullish, we have the bearish pennant where there was a retest in the candle week before coming down after breaking the trend line. The same goes for the rising wedge. Also the bearish flag where the candle actually tested after coming down below the trend line. Then lastly we have the inverse head and shoulders for the bearish pattern. There was a time the trend happens to be under where the candle, by the way the candle were moving at the top. There was a head and shoulder pattern. First the shoulder, then next was the head, then the last one was the shoulder before it broke down the trend line below. Then it retested at a point here, before going down. So you see there's a point where you can actually place your entry for sell short at that point. Yeah, that is that for this bearish pattern. Like I said, practice will make perfect. If you want to master this candle pattern, you have to use the above tool by drawing trend lines on TradingView on Binance. Also, you can actually work with reverse patterns. You can be able to identify when the market is about to make a reverse, when it's within a range, when it's within support. Buy long.
Dreamstime.com audio. Dreamstime.com audio. Dreamstime.com audio. Dreamstime.com audio. Dreamstime.com audio.
$90 right now. So these are my candle charts. You can see here I've switched off all my indicators. So no indicators is on here. So I can make my tech analysis. If you look at the time frame at the top, these are 4 hours time frame. But for better understanding, for better for better and more accurate analysis, we are going to be using the 1 day time frame. Now just here we'll see the one for 1 day. We'll click on it. Now each of these candles now represents 1 day movement in the market. Now these are where you now get to use these tools. You see at this point, okay, just click up here. You see the drawing option. You click on the drawing option. Page goes like this. So actually there are many tools we can actually use here. Why the Binance have few of these tools, TradingView have more of this. So I'm going to be using this first tool here. First tool just at this place. You can get trend line from this. So it's actually okay. I'll cut it here. I'll post the next video after this. There's going to be the part 1 of this stuff, since there's a little heat now in the flow of this class. So watch out for the next video. Have a nice time.